Hello and welcome to another update video about ADA. On the ADA chart, we have either a super bullish direct breakout situation, but it would really need to break out soon, or we have this situation that it's actually a leading diagonal which is unfolding here. I hope we can avoid it. But we can see it across the crypto charts at the moment, yeah, because with the patterns that we've been tracking over the last few weeks, really, charts should have broken out already. We see attempts here and there, and to be honest, prices have mostly gone up anyway. However, not to the degree as ideally it would take place in a third wave rally. So what we see here on the ADA chart, this is by the way the movement since the 10th of March low. I'm obviously tracking at the moment this as a wave 1, a wave 2, and another 1. Possibly 2 here finished, yeah, or a deeper wave 2 into the yellow box. Let's say the issue I have with all of this is that we should really start to see a breakout shortly. And so far it's just a lot of overlapping price action, right? So it's either a series of a lot of 1-2 setups, or we see this leading diagonal. It is one pattern I showed you already a few days ago, but now I see it on the ETH chart as well. I'm only tracking it at the moment as a possibility. But in this video, we want to talk about what does it mean, a leading diagonal, right? What's the difference between impulses, which we're tracking, and the leading diagonal? First of all, both would be bullish options. The problem is that the leading diagonal is less reliable. A leading diagonal could also be corrective. But let's first start with the impulses. Yeah, let's first start with the patterns I've been tracking. So we've talked about, obviously, the low in December, yeah, that rallied in a wave 1 to the upside. That's when we had the view, or started to have the view, that the trend has changed. Wave 1 to the upside, yeah, quite impulsive price action. Then an ABC structure to the downside in a wave 2, turned around in the trend reversal area. We then rallied in, again, another wave 1 of the higher degree third wave. That's the impulsive scenario, came down in a wave 2. Within this third wave then, we have another 1-2 setup, which could either be finished or we start to see a reset of this and go a little bit lower. But as long as we're holding 35.2 cents, we can focus imminently on higher in this direct breakout scenario based on FIB levels, yeah. Because as long as we're holding the 78.6 retracement of this particular 1-2 setup, this is direct breakout material, okay? Right, so and then, you know, on the lower time frame, there is not really anything that changed to the last video. So I did explain it to you in the last video that, okay, really in the lower time frame, this move here that started on the 27th of March could be a wave 1. And then here, either we bottomed already, but then we should really see a breakout soon, but this move is too choppy. So I'd rather prefer maybe a deeper setback into the yellow box again and then a rally. Problem is with this, that as you can see here, we would break out of this wedge pattern to the downside. So this is a so-called ascending wedge. There are no ascending wedges in Elliott wave, but we call them leading diagonals, or could also be ending diagonals in some charts. But depending on, this is a leading diagonal here. In this leading diagonal, what does it mean? Well, it means that in a leading diagonal, you deal with unreliable corrective subwave structures. So it would be wave 1 to the upside, wave 2 to the downside, wave 3 to the upside, wave 4 to the downside, wave 5 to the upside, ready to break to the downside basically now. We had a diagonal pattern here as well, which was also so choppy, very similar structure, and it broke to the downside. Here, this was an ending diagonal, end of January, just that you can see the comparison. Now, they are not necessarily bearish, but what it means is that it's a 5-wave move, 1, 2, 3, 4, 5. So it could be a bullish move, which allows for overlapping price action, which we see here. An ascending wedge, in, I would say, 75% of cases, they do break to the downside. So it is all in line with the leading diagonal thesis. And if we break to the downside here, then what would be the key support area? Because then this would be, again, the large leading diagonal would then be the wave 1. The wave 1 would not sit here, it would sit up here, which means we would come down in a wave 2. So it would mean wave 1 up here, wave 2 somewhere down here. So it would allow for a deeper setback. I just want to bring it up because I start to see this possibility on several crypto charts. I'm not saying it will happen. It's something I'm tracking at the moment. The problem that we have here is that the direct breakout scenario allows actually for a pullback to 35.2 cents. So we need to be ready for that. But if we break below that, then we have to be ready that it could just be a diagonal pattern. And in the diagonal, what would be the standard support zone? Well, it would go down to 32.2 cents, right? So yeah, so this is something we need to be ready for. So you will have two support areas just above each other. That's the problem with this now. But again, it would allow to scale into this larger box for anybody who wants to trade it. Just be ready for it. Yeah, it could be that diagonal pattern which will then unfold. Not necessarily bearish, but the problem is with a diagonal, they are unreliable. So there's nothing, if we have a diagonal, like it could also just be corrective price action, yeah? This could just be something like a B wave top or something crazy, which would then lead to new lows. A diagonal always needs proof. So if we have a wave 1 leading diagonal, you cannot really confirm the trend has shifted until you see that it's holding the wave 2 support area, because it is so similar to a correction, like an ABC. However, because we have had an impulse here of the December lows and a correction down into March, I currently assume it's a leading diagonal and not something bearish, okay? But it still needs proof. But ideally we see the direct breakout. So we continue to track what we've been tracking. Just be aware that it could lead to a bit of a deeper setback. And if that happens, it would be the leading diagonal scenario where we have a chance to still rally in a third wave afterwards, but it would explain all the choppy price action that we've been seeing. And as long as it's holding 32.2 cents and doesn't break and sustain below it, we can focus on higher. But I'll keep you updated about this. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.